Hi, my name is Allie Kraus, and welcome to our Birkenroad Reports video presentation on AFC Enterprises. My analyst team includes Xiao Bai, Stephen Finn, Morgan Winston, and Eric Wiley. AFC Enterprises trades on the NASDAQ under the stock ticker symbol AFCE. Our team developed a 12-month target stock price of $26 per share, consistent with Birkenroad Reports' market underperform investment rating. Headquartered in Atlanta, Georgia, AFC Enterprises develops, operates, and franchises quick-service restaurants, abbreviated as QSRs, under the trade name Popeyes Chicken and Biscuits and Popeyes Louisiana Kitchen. Popeyes' chief product is chicken, however, other menu options include fried shrimp, jambalaya, red beans and rice, and other regional items. Popeyes' authentic New Orleans-style cuisine gives the restaurant a unique edge over its competitors because no other QSR features a Cajun and Creole cooking style. Popeyes is now the second largest quick-service chicken restaurant behind KFC based on number of units. As of December 30, 2012, Popeyes operated and franchised 2,104 restaurants worldwide. Popeyes restaurants are located in 47 states, the District of Columbia, Puerto Rico, Guam, the Cayman Islands, and 26 foreign countries. Figure 5 depicts the geographic breakdown of Popeyes locations. The QSR industry is very fragmented, allowing new competitors to enter the market frequently. AFC Enterprises competes with the largest companies in the fast food industry. These include McDonald's, Yum! Brands, Sonic, and Chipotle Mexican Grill, which are all public companies, and Chick-fil-A and Boston Market, which are private companies. AFC's market capitalization is smaller than most of its peers, meaning it has a smaller company that is still growing. Here is a chart depicting the QSR chicken segment. As you can see, in 2011, Popeyes was ranked as the third largest chicken QSR in terms of market share as well as in U.S. sales. Popeyes had the second highest growth in restaurant units during 2011, with plenty more room left to grow the number of its units within the U.S. markets, not to mention the vast potential for international growth. AFC's 5-year stock performance is presented here. During the recession, AFC's stock price was at an all-time low at $3. It has since rebounded to an all-time high of $36. As you can see, AFC's stock price has performed very well over the past 5 years, with the stock price doubling in 2012 alone. Popeyes faces several potential risks that could affect its earnings. Environmental risks such as droughts could result in hikes in commodity prices. FDA regulations and labor laws pose regulatory risks that could increase costs for AFC, and financial risk could potentially increase as Popeyes grows its presence internationally, which might subject the company to foreign exchange rate risks. This chart shows the increase in the poultry commodity prices resulting from the 2012 drought, which affect AFC's chicken prices. Popeyes is focused on increasing its total stores, growing same-store sales, improving customer satisfaction, and expanding its brand recognition both domestically and internationally. Our investment highlights will cover new image for Popeyes brand, guest experience, domestic growth, international expansion, franchisees, and its overvalued stock. In 2008, Popeyes launched a rebranding initiative with the mission of introducing a new logo, new products, a new advertising campaign, and remodeling each restaurant. One major change includes switching restaurant names from Popeyes Chicken and Biscuits to Popeyes Louisiana Kitchen to emphasize Popeyes' extensive Cajun menu. For the company's new logo, Popeyes' marketing team chose a large dancing pea surrounded by warm, rich colors to signify Cajun spices, such as the ones used to flavor the company's products. In 2009, the company began airing national television commercials to develop greater awareness and to expand its customer base. The company has also introduced a spokeswoman, Annie, a relatable tell-it-like-it-is Popeyes connoisseur. The company has remodeled 25% of its stores in the United States. The new restaurants have a modernized, upscale feel and emphasize the rich culture and history that surrounds Popeyes. In 2013, Popeyes executives introduced a fifth pillar to the company's general strategy, emphasizing the importance placed upon customer experience. Popeyes management named this new customer service initiative Create a Culture of Servant Leaders. These servant leaders are expected to craft a supportive and friendly work environment to improve their personal performance and the performance of their coworkers. Company executives want their customer satisfaction levels to meet the standards of their quality food. They believe that improving customer service standards will greatly enhance overall guest experience. A key to AFC's continued success is new restaurant openings. Popeye's number of stores is the main factor that drives its revenues. The company has many markets within the United States that it has yet to enter. Currently, 70% of AFC's domestic restaurants are located in only 10 states. Popeyes has no restaurants in 3 states, South Dakota, Wyoming, and Vermont. Another 18 states have fewer than 10 restaurants. The national advertising campaign has increased the national demand for new Popeyes restaurants. In 2012, the company opened 79 domestic franchise restaurants. In addition, in November 2012, AFC acquired 26 KFC venues from a bankrupt franchisee in Minnesota and California. These locations will be transformed into Popeyes restaurants. AFC believes that New Orleans, Louisiana may be the only fully saturated market in the United States. The company plans to focus on domestic growth paired with a conservative entry plan into international markets. Popeyes plans to establish a footprint in the international market where a significant potential for growth exists. Popeyes currently has restaurants in 26 foreign countries compared to KFC, which can be found in 105 countries. KFC currently operates close to 12,000 foreign restaurants, whereas Popeyes operates 425. Of these 425 restaurants, 60% are located in South Korea, Canada, and Turkey. In 2012, Popeyes opened 57 international franchised restaurants. 75% of international restaurant growth comes from existing markets. Here is a map depicting Popeyes' current market locations. In the future, AFC executives plan to expand into emerging markets with rapidly growing middle-class segments. Popeyes' international expansion relies heavily on the company's relevant menu. The spicy, bold, and flavorful profile is attractive to many cultures, especially those in Asia. Popeyes executives believe that their franchisees serve as the backbone of the company's operations. Popeyes restaurants are 98% franchised and 75% of new restaurants are opened by existing franchisees. AFC executives are thorough in selecting franchisees. Popeyes owners must be passionate about food, plan to open 5 or more restaurants, and believe in the purpose and principles of the company. AFC executives incentivizes franchisees to open new stores by waiving fees for franchisees that open 2 to 3 stores within a year. AFC's president said franchisee applications have increased significantly since Popeyes' national advertising campaign began. By increasing the quality and quantity of Popeyes franchisees, AFC will continue to grow Popeyes' footprint and thus overall company profits. Although the future for AFC looks bright, the stock price may currently be overvalued due to the recent stock repurchasing program and all-time highs in market movements. In 2012, management repurchased and retired 741,228 shares of common stock worth about $15.2 million. Management believed that the best way to return value to AFC's shareholders was to repurchase stocks because the company does not pay dividends. In addition, investors have recently restored their confidence in the equity market, which is reflected by the 16% average rate of return in the NASDAQ in 2012. Consequently, AFC's stock price rose more than 100% over the past year, but such high returns are unlikely to be sustained. By using the weighted average of 3 different valuation approaches, including discounted cash flow, relative price to earnings, and relative enterprise value over EBITDA methods, we determined AFC's 12-month target price to be $26. Although our target price reflects a market underperform rating, we believe the future of the company is promising given its strong potential for growth. We discounted cash flows out to 2022 with an assumed terminal growth rate of 2.72% for an estimated terminal cash value of $677,457. Cash flows were then discounted at AFC's weighted average cost of capital of 11.78% to get a target share price of $20.59. In measuring the price-to-earnings ratio of AFC's peer group, we calculated an average of 24.02. When multiplying this ratio to AFC's projected earnings per share of $1.27 for 2013, we found a share price of $30.58. We found the average EV over EBITDA of AFC's peers to be 12.39. We applied this ratio to our forecasted 2013 EBITDA for AFC of $55.3 million, then subtracted debt, added cash, and divided by total shares outstanding to arrive at a target price of $26.32 per share. According to the Ben Graham analysis, AFC Enterprises is not an attractive stock to invest in. AFC only managed to pass 2 out of the 8 hurdles. The first 6 hurdles indicate that the stock might be overpriced and not be an attractive value stock. However, AFC did manage to pass the last 2 hurdles, indicating strong earnings growth and stability in the company's earnings. In our analysis, we concluded that AFC was slightly overvalued, but we also believe that the company is on track for strong future growth in the QSR industry. The Birkenwell reports are produced solely as a part of an educational program at Tulane University's Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you for listening to our video presentation. Now go out and get some Popeyes Cajun Surf and Turf.